Did you know that the average person spends over 90,000 hours at work in their lifetime? That's more than 10 years of your life spent working. Now imagine if you could reclaim those hours and spend them doing what you love instead. Sounds impossible? Well, it's not. Today, we're going to explore 5 powerful assets that could help you quit your job and achieve financial freedom. These aren't your average investment strategies. We're talking about game-changing approaches that could transform your financial future. And trust me, you won't want to miss the last one. It's a strategy that's helped create some of the wealthiest people on the planet. But first, let's define what we mean by financial freedom. It's not just about having a lot of money in the bank. Financial freedom means having enough passive income to cover your living expenses without needing to work. It's about creating a lifestyle where money works for you, instead of you working for money. So are you ready to discover how you can build a life of financial independence? Let's dive in. Our first asset might seem obvious, but there's more to it than meets the eye. Dividend stocks, the silent income generators. Dividend stocks are like the quiet achievers of the investment world. They're not flashy, they don't make headlines, but they can provide a steady stream of income that could be the foundation of your financial freedom. Here's how they work. When you buy a dividend stock, you're essentially becoming a partial owner of that company. And as an owner, you get a share of the company's profits in the form of dividends. It's like owning a mini business, but without the hassle of actually running it. Now, not all stocks pay dividends. Companies that do are usually well-established and financially stable. Think of big names like Coca-Cola, Johnson & Johnson, or Procter & Gamble. These companies have been paying dividends consistently for decades. But here's where it gets interesting. The amount of dividends you receive is called the dividend yield, and it varies from company to company. For example, as of our last update, Apple's dividend yield was less than 1%, while ExxonMobil's was over 3%. This means if you invested $100 in ExxonMobil stock, you'd receive about $3 in dividends each year. Now, $3 might not sound like much, but remember, this is just from a $100 investment. Imagine if you had $100,000 invested. Suddenly, you're looking at $3,000 in annual dividends. And that's just from one stock. But here's the kicker. Dividend investing isn't a get-rich-quick scheme. It's a long-term strategy. Unless you have a large amount of capital to invest upfront, it takes time to build a substantial dividend income. For instance, to make $1,000 per month in dividends with an average yield of 3%, you'd need a portfolio worth about $400,000. However, don't let that big number discourage you. Many investors use a strategy called dividend reinvestment. Instead of pocketing the dividends, they use them to buy more shares of the stock. Over time, this can lead to significant growth in both your portfolio value and your dividend income. And here's a little-known fact that makes dividend stocks even more attractive. In many countries, dividends are taxed at a lower rate than regular income. This means more money in your pocket at the end of the day. Now, while dividend stocks can provide a steady stream of passive income, our next asset takes things to a whole new level. Cash flowing real estate, your ticket to wealth building. You've probably heard people say that real estate is one of the best ways to build wealth. And they're not wrong. Real estate has some unique advantages that make it a powerful tool for achieving financial freedom. First, let's talk about appreciation. Over time, real estate tends to increase in value. For example, in the early 1990s, the median home price in the U.S. was around $100,000. Today, it's over $400,000. That's a fourfold increase in just 3 decades. But here's where it gets really interesting. You don't need to have all the money up front to buy a property. Let's break down an example. Say you want to buy a house worth $200,000. You might put down a 20% deposit, which is $40,000, and borrow the rest. Now, you own a $200,000 asset with just $40,000 of your own money. This is called leverage, and it's one of the most powerful wealth-building tools in real estate. Now, let's say you rent out this property. After paying the mortgage, insurance, taxes, and other expenses, you might have $370 left each month. That's $4,440 per year in positive cash flow. But that's not all. Your tenant is essentially paying off your mortgage for you, helping you build equity in the property. And it gets even better. As your property increases in value, you can use a strategy called equity release. Let's say your $200,000 property is now worth $250,000. You could refinance the property and take out that $50,000 in cash. You could then use that money as a deposit on another property, essentially doubling your real estate portfolio and your cash flow. But before you rush out to buy a property, remember that real estate investing isn't without risks. Property values can go down as well as up, and being a landlord comes with its own set of challenges. It's crucial to do your research and possibly seek professional advice before diving in. If you're finding this information valuable, please take a moment to hit that like button and subscribe to our channel. It really helps us reach more people with this important information. And don't forget to turn on notifications so you never miss our latest videos on financial freedom and wealth building. Now, before we move on to our next asset, let's pause for a moment. Have you ever considered investing in real estate? What do you think are the biggest challenges? Share your thoughts in the comments below. We'd love to hear from you. All right, let's keep going. Our next asset might surprise you. While real estate and stocks are popular choices for building wealth, our next asset plays a different role in your financial freedom journey. Bonds, your financial safety net. When most people think about investing for financial freedom, bonds don't usually come to mind. They're often seen as boring, low-return investments that barely keep up with inflation. But here's the thing. Bonds can play a crucial role in your investment strategy, especially as you get closer to financial freedom. Let's start with a story. Warren Buffett, one of the most successful investors of all time, once said that if he died before his wife, he'd instruct his money manager to put 90% of her money in simple index funds like the S&P 500 and the remaining 10% in bonds. Now, why would one of the world's greatest stock investors recommend bonds? The answer lies in what bonds do best: provide stability. While stocks can give you higher returns, they can also be volatile. Bonds, on the other hand, tend to be more stable. They can act as a cushion when the stock market takes a dive. But here's where it gets really interesting. Finance professor Javier Estrada decided to test Buffett's strategy using historical market data. To everyone's surprise, this simple 90/10 portfolio outperformed many expert recommendations for retirement investing. But Estrada didn't stop there. He added a twist that could make bonds even more powerful in your quest for financial freedom. Here's how it works. Once you're financially free and living off your investments, keep a close eye on the market. When stocks are doing well, withdraw money from your stock investments. But when the market is down, take money from your bonds instead. Why does this matter? Because it gives your stocks time to recover when the market is down. Instead of selling stocks at a loss, you're using your bonds as a financial safety net. This strategy can help your portfolio last longer and weather market storms more effectively. Now you might be thinking, but bonds give such low returns. Won't this strategy slow down my wealth building? And you'd be right, if you use this strategy from the start. That's why many financial experts recommend increasing your bond allocation as you get closer to financial freedom. When you're just starting out, you might have very few or no bonds at all. But as you approach your financial freedom goals, you might increase your bond allocation to 20%, 30%, or even more, depending on your risk tolerance. Remember, the goal of bonds in your portfolio isn't to make you rich. It's to keep you rich by providing stability and protection against market downturns. Now that we've covered some traditional investment assets, let's talk about an asset that can give you more control over your financial destiny. Cash-flowing businesses. Be your own boss. When people think about quitting their job and achieving financial freedom, many dream of starting their own business. And for good reason. Owning a business can be one of the most powerful ways to build wealth and create passive income. But here's the twist. We're not talking about starting a business and working 80-hour weeks. We're talking about owning a business that generates cash flow without requiring your constant presence. It's about being a business owner, not a business operator. Now you might be thinking, that sounds great, but I don't have any business ideas. Well, here's the good news. You don't need to come up with a revolutionary new product or service. There are plenty of existing business models that can generate cash flow. For example, you could buy a franchise. This gives you a proven business model and established brand, reducing some of the risks of starting from scratch. Or you could invest in a local business that's already up and running. Many small business owners are looking for investors or partners to help them expand. If you're more tech savvy, you might consider online businesses. This could be anything from a software as a service company to an e-commerce store. The beauty of online businesses is that they often have lower overhead costs and can be run from anywhere in the world. But here's where it gets really interesting. Owning a business isn't just about the cash flow. It also comes with some significant tax advantages. As a business owner, you can often spend money on business expenses before paying taxes. For instance, if you own a business with multiple locations, you might be able to buy a car using pre-tax dollars if you use it to visit your different sites. Of course, it's crucial to consult with a tax professional to understand what's allowed and what's not. The last thing you want is to run afoul of tax laws. Now, owning a cash-flowing business isn't without its challenges. It often requires more upfront work and investment than other assets we discussed. You'll need to hire and manage staff, deal with customers, and navigate the complexities of running a business. But for many, the rewards, both financial and personal, are worth it. And here's a pro tip. You don't have to limit yourself to just one business. Many successful entrepreneurs own multiple cash-flowing businesses, creating a diverse stream of passive income. We've covered some powerful assets so far, but our final asset takes things to a whole new level. It's a high-risk, high-reward strategy that's created some of the world's wealthiest individuals. Startups and growth companies, the potential for explosive wealth. Have you ever looked at a company like Amazon, Google, or Facebook and thought, if only I had invested in them when they were just starting out? Well, that's exactly what we're talking about with our final asset, investing in startups and growth companies. This type of investing is not for the faint of heart. It's high risk, and many startup investments end up being worth nothing. But for those who pick the right companies, the rewards can be life-changing. Let's put this into perspective. If you had invested $1,000 in Amazon's IPO in 1997, that investment would be worth over $1.5 million today. That's a return of over 150,000%. Of course, hindsight is 20/20, and for every Amazon, there are hundreds of startups that fail. So how do you invest in startups? There are a few ways. 1. Angel investing. This involves directly investing in early-stage companies. You'll typically need to be an accredited investor for this, which means having a high net worth or an income. 2. Venture capital funds. These are professionally managed funds that invest in startups. They allow you to spread your risk across multiple startups. 3. Equity crowdfunding. This is a relatively new option that allows regular investors to buy shares in startups through online platforms. 4. Initial public offerings, IPOs. While not exactly startups, newly public companies can still offer significant growth potential. Now, here's the crucial part. Most professional investors who deal with startups and growth companies only allocate a small portion of their overall portfolio to these high-risk investments. They understand that many of these investments might go to zero, but they're betting that the ones that succeed will more than make up for the losses. It's also worth noting that investing in startups isn't just about the potential financial returns. Many investors find it rewarding to be part of innovative companies that are trying to change the world. You might get to attend shareholder meetings, provide advice to the founders, and be part of the journey as the company grows. Now that we've covered these 5 powerful assets, let's talk about the most important investment of all. The ultimate investment, your education. While all the assets we've discussed today can be powerful tools for building wealth and achieving financial freedom, there's one investment that trumps them all: investing in your own education. Without the right knowledge and skills, even the best investment opportunities can turn into disasters. Real estate can be a great wealth builder, but without proper education, it can lead to financial ruin. The stock market can create millionaires, but it can also wipe out savings for those who don't understand what they're doing. That's why continuous learning is crucial. Read books, attend seminars, take online courses. Learn about personal finance, investing, business, and economics. The more you know, the better equipped you'll be to make smart financial decisions and take advantage of opportunities when they arise. And remember, education isn't just about formal learning. Some of the best lessons come from experience. Start small, make mistakes, learn from them, and grow. Every successful investor and entrepreneur has a story of failure that taught them valuable lessons. Each of these assets has its own strengths and weaknesses, and the right mix for you will depend on your personal financial situation, goals, and risk tolerance. Which of these assets do you think has the most potential to help you achieve financial freedom? And more importantly, what's stopping you from starting to invest in it today? If you found this video helpful, please give it a thumbs up and hit that subscribe button. And don't forget to turn on notifications so you never miss our latest videos on financial freedom and wealth building. We'd love to hear your thoughts and experiences. Have you invested in any of these assets? What were your results? Share your stories in the comments below. Remember, the journey to financial freedom is a marathon, not a sprint. It takes time, patience, and continuous learning. but with the right strategy and mindset, it's absolutely achievable. Thanks for watching, and here's to your financial freedom.